Bitcoin price is struggling to move higher, and traders are starting to ask why momentum has faded. Bitcoin is trading below 90,000, showing clear weakness from buyers. According to an experienced trader, the crypto market is not ready for a sustained rally yet. The current correction is driven mainly by heavy selling on spot markets. Most of this selling comes from crypto ETF holders and large proprietary trading firms. These players were vocal about buying, but quiet when they started selling. As spot selling increased, long positions on derivatives markets were liquidated. This added further downside pressure on Bitcoin price. Another key negative factor is tightening credit conditions. Access to cheap liquidity has worsened, limiting risk appetite across markets. While futures markets still show large volumes, spot trading remains the most important segment to watch. Spot flows reflect real demand, not leverage. ETF inflows and outflows are now a critical indicator. When ETFs see net selling, it signals reduced institutional demand. Options markets remain relatively small and currently have little impact on price action. Looking ahead, December is typically a period of declining volatility. As the holiday season approaches in the United States and Europe, trading activity slows sharply. By the end of the month, liquidity often dries up. The trader believes new all-time highs are only possible if major policy changes occur. Specifically, if Donald Trump gains control over the Federal Reserve and pushes for dollar devaluation, a short-term bounce is possible, but not a breakout to new records. One supportive factor is the start of quantitative easing. After cutting rates in December, the Federal Reserve announced plans to buy $40 billion in Treasury bonds. Monthly liquidity injections could range from $40 to $120 billion during the year, with pauses. These amounts may support markets, but they are not massive. A leadership change at the Federal Reserve could shock markets initially. Over time, aggressive rate cuts would weaken the dollar and support risk assets. For now, Bitcoin remains range-bound. Watch spot selling, ETF flows, and liquidity conditions closely. These factors will define the next major move in the crypto market.